Welcome, ladies and gentlemen. My name is Peter Youssef, and together we'll be going through a webinar about the week ahead in the Forex market, namely about the week of August 16th to 20th. And before we start, I'll leave you a couple of seconds to go through our disclaimers and our risk warnings. Now, as you're reading, small intro. With the holiday season in many European countries and Northern America on, and with worries for the path of the pandemic globally, the week is about to end. In the coming week on the monetary front, we highlight the release of the Fed's last meeting minutes, as well as Powell's speech. While from Australia, RBA is also to release the minutes of its last meeting, and from New Zealand, RBNZ is to release its interest rate decision. As for financial releases, we have a packed week ahead of us. And on Monday, we note Japan's GDP rate for Q2 and China's industrial output growth rate for July. On Tuesday, we get UK's employment data for June, as well as the US retail sales for July, while on Wednesday, we highlight Canada's inflation rates for the same month. On Thursday, we get Australia's employment data for July, as well as the US Fed Business Index for August, while on Friday, we get Japan's CPI rates for July, as well as UK's and Canada's retail sales for July and June, respectively. Now, with no time to waste, we start with the with the US dollar, and that would be the USD index for our chart. Note how the USD index has been moving in a sideways motion between the 93.20 and the 92.75 levels, which it has just broken below the 92.75, turning it from support to resistance. We would require, though, a clearer break to actually switch our sideways bias in favor of a bearish outlook. However, I would like to highlight that the index's price action has reached the lower boundary of the Bollinger Bands, which may imply that a stabilization could come into play, while at the same time, the RSI indicator below the 4-hour chart has reached below the reading of 50 in a clear downward motion, which may imply that the bears have the upper hand regarding the direction of the index. Moving now to US dollars fundamentals. The USD seems about to end the week at the same levels as it began, despite some degree of volatility being present during the week. As the markets maintain their worries for the Fed's intentions regarding its asset purchases, the debate whether the Fed is to taper its QE program earlier than expected or not has heated up. Over the past week, a number of Fed officials had expressed themselves openly in favor of tapering the Fed's QE program rather sooner than later, showing a deepening reef among the Fed's policymakers ahead of the Jackson Hole summit near the end of August. Policymakers such as Dallas Fed President Kaplan seem to be more vocal in favoring some tightening action, while Fed Chairman Powell and New York Fed President Williams seem to be leaning more towards the dovish side. We highlight Powell's speech on Tuesday, which may provide some clues as for the Fed chairman's stance. Also on the monetary front, we note the release of the bank's last meeting minutes, which could create substantial volatility for the USD, yet also for US stock markets. The greenback was boosted also by inflation data for producers, which accelerated for the month of July, reaching record high levels. Should prices of raw materials continue to rise, producers may pass them on to the end price of their products, thus boosting inflation for consumers once again. Please note that the weekly initial jobless claims figure dropped, implying that the US employment market tightened for the first week of August. In the coming week from the US, we start on Monday with the release of the New York Fed manufacturing for August. On Tuesday, we get the retail sales and industrial production, both for July. And on Wednesday, the housing data for July. On Thursday, we highlight the weekly initial jobless claims figure and the Philly Fed Business Index for August. Moving now to the pound, and this would be GBP USD's 4-hour chart. Note how the pair has been resisting, but it seems that the bearish tendencies are growing, and we tend to maintain a bearish outlook for the pair as long as it remains below the downward trend line, as shown with a black line in our chart. Now, for the time being, we note to the upside the 1.3845 resistance line. Higher than that would be the 1.3990, and even higher the 1.4145. To the downside, we would highlight the 1.3670, lower than that the 1.3525, and even lower the 1.3350. Moving now to the pound's fundamentals. The pound seems about to end the week lower against the USD over the past week, but also against the common currency and the Japanese yen, implying a weakness on the GBP side. Please note that the pound dropped despite data showing that the UK economy expanded in Q2 and escaped the negative territory. Yet the market seemed to expect that the BOE, despite all the confidence expressed, may be reluctant to proceed with any tightening of its monetary policy. It should be noted that in the past weeks, the pound may have outperformed other currencies given that the pandemic eased its grip on the UK, expressed in the lower number of COVID cases and high vaccination rates, which allowed the UK government to lift most of its social distancing rules. On the fundamental side, we note BOE's monetary policy as well as the path of the pandemic in the UK and Brexit as possible issues to watch out for. As for financial releases, on Tuesday, we get UK's employment data for June. On Wednesday, we note UK CPI rates for July. And on Friday, we get UK's retail sales growth rate for the same month. Moving now to the Japanese yen, and this would be USD JPY's 4-hour chart. Note how the pair has started to fall after breaking the upward trend line, guiding it from the 4th of August until the 10th of August, maybe even 11th of August. We tend to maintain a bearish outlook for the pair as JPY seems to be strengthening, and in such a case we may see the pair breaking the 109.95 and start aiming for the 109.25. Even lower than that, we would highlight the 108.45 support line. Should the bulls take over and the pair's price action reverse direction and start aiming higher as a first stop, we would highlight the 110.90. Higher than that would be the 111.65, which successfully reversed the pair's upward motion at the beginning of July. Higher than that would be the 112.40 as the highest level noted in our chart. Please note that the RSI indicator below the 4-hour chart for the time being is below the reading of 50, which may imply a slight advantage for the bears. At the same time, though, the pair's price action has reached the lower boundary of the Bollinger Bands, which may imply that a correction lower or some stabilization could come into play. Moving now to JPY's fundamentals, JPY seems about to end the week stronger against the USD, but also slightly bullish tendencies are displayed against the common currency in the pound. Fundamentally, the COVID situation in Japan remains worrying. It's characteristic that a member of a Tokyo metropolitan government coronavirus advisory panel of experts said it was now impossible to control the spread of COVID-19 in the capital. Said that infections are raging at disaster level. It's an emergency. And more or less, he also mentioned that it's impossible to control the situation, all of that according to Bloomberg. It should be noted that the number of daily cases has reached record highs since the beginning of the month, while the number of daily deaths seems to remain rather low, providing some comfort. We maintain the view that safe haven flows are to dictate the currency's direction, yet we also get a high number of releases from Japan in the coming week. JPY traders are to have an early start, as on Monday we get Japan's GDP rate for Q2. On Wednesday we get Japan's machinery orders for June and the trade data for July, while on Friday we get Japan's CPI rates for July. Moving now to the common currency, and this would be Euro USD's 4-hour chart. Now the pair has been slowly rising in the past 2 days. I would dare to say that we may see this upward motion continue given that the RSI indicator below the 4-hour chart is above the reading of 50, starting to aim for the reading of 70. which may imply that the bulls may have the upper hand here. On the flip side, I would highlight that the pair's price action has reached the upper boundary of the Bollinger Bands, which may imply some stabilization. Nevertheless, should the bulls maintain control of the pair's direction, we may see it breaking the 1.1785, which has caused considerable trouble around the end of July. Higher than that, we would highlight the 1.1885, which was able to cap the pair's upward movement from the 29th of July until the 4th of August. However, it had also some touches in earlier stages. And even higher would highlight the 1.1990. To the downside, we would note the 1.1695, the 1.1605, and lower than that, the 1.1505. Moving now to the common currencies fundamentals. The common currency, as we have mentioned, seems about to end the week at the same levels against the USD, yet tended to gain somewhat against the pound and even more against safe haven CHF. On the monetary front, the ECB's ultra-loose monetary policy seems to be weighing somewhat on the common currency. The interest rate differential seems to be highlighted as other central banks, such as Canada's and New Zealand's, have already started or are about to tighten the monetary policy, while others, such as the Fed, is actively considering it. We also tend to maintain practically our worries for the economic rebound of the zone, given that Germany's forward-looking self-indicators for the month of August unexpectedly dropped, showing less optimism for the next months of the largest economy in the zone. At the same time, it should be noted that Eurozone's industrial output growth rate slowed down for June, underscoring such worries. On the other hand, it seems that the inflationary pressures in Germany are still strong for the month of July. Now, it's a so-so situation, and in the coming week, we note the release of Eurozone's final HICP rate for July and the second estimate for the GDP growth rate for Q2, while at the end of the week, we get from Germany the producer prices for July. So given the low number of high-impact financial releases, we would expect fundamentals to take the lead regarding Euro's direction. Moving now to the Australian dollar, and this would be AUD USDs for our chart. Please note how practically AUD USD has maintained a sideways motion just above the 0.7335, maybe with one outburst around the 11th to 12th of August, aiming for the 0.74. We tend to maintain the bias for a sideways motion, given that the pair's price action has also broken the downward trend line. Now we would highlight, first of all, to the downside, the S1 0.7335, which is also the boundary of its sideways, the lower boundary of its sideways movement. To the upside, the 0.74. However, we should note that the 0.74 has acted as a resistance line numerous times since the end of July. Higher than that, we would highlight the 0.7465 and even higher the 0.7545. To the downside, besides S1, we would also highlight S2, 0.7265, and even lower than that, the 0.72. Moving now to Aussie's fundamentals. The Aussie, as we have mentioned, is also about to end the week at the same levels against the USD as it began. Aussie fundamentals, though, seem to weigh, given that the pandemic back home has forced Australians to live under lockdown rules. At the same time, iron ore prices seem to continue to be in a downtrend as China's pressure towards that end is considerable and could weigh on the Aussie, given that iron ore is one of the main export products of Australia. Now, it should be noted that news from China were also worrying, given that one of the largest ports worldwide, placed in China, has closed down due to coronavirus, which could adversely affect regional and to a less extent global trading conditions, to which commodity currency AUD is quite sensitive. On the monetary front, we highlight the release of RBA's last meeting minutes, and should the document reflect the bank's optimism, we may see the Aussie getting some support. As for financial releases from China, we highlight on Monday the release of China's industrial output growth rate for July. which is of particular interest for Australian exporters of raw materials, and we also note China's retail sales growth rate for the same month. On Wednesday, we get Australia's wage price index on a year-on-year basis for Q2, which could affect RBA's stance, while on Thursday, we get Australia's unemployment rate and employment change figure for July. Should overall the employment data show a tightening of the Australian employment market, we may see the commodity currency getting some support, as it may allow RBA to express more confidence. Moving now to the loonie, and this should be USD CADs for our chart. Now, the pair has been moving in a sideways motion between the 1.2470 and the 1.2560 levels. We tend to maintain our bias for a sideways motion, and we would require a clear breaking of either levels mentioned for our opinion to change. Please note how the RSI indicator below the 4-hour chart runs nicely along the reading of 50, implying a rather indecisive market, which is also evident as the pair's price action is actually at the midpoint of the Bollinger Bands. Now, moving to see the specific levels noted would be to the downside the 1.247 first. Second would be the 1.2365, and lower than that the 1.2270. To the upside, we would highlight the 1.2560, higher than that the 1.2650, and even higher the 1.2785, which also marks the highest point of our chart for the period around the 20th of July. Moving now to the loonies fundamentals. Now the loonie seems to have gained a bit against the USD in the past few days, yet volatility overall seems to remain rather low for the pair. The loonie strengthening against the USD seems to reflect the slight increase in WTI prices since Monday. Oil's fundamentals seem to be split on how deep the effect of the pandemic's Delta variant is to be on oil demand's recovery. On the supply side of the oil market, the possibility of OPEC members increasing substantially more their production levels seem to be fading away despite the US call for more oil. It should be noted that EIA noted in a report that oil consumption was on the rise in some countries, boosting oil traders' optimism. Yet we tend to maintain our worries for the possible adverse effect of rising COVID cases on oil demand. On the other hand, the frictions of the Canadian-Chinese relationships, despite being intense recently with the jailing of a Canadian businessman in China, do not seem to affect the CAD, while news that Canada's PM Justin Trudeau could be calling for snap elections are also to be kept under close eye. As for financial releases from Canada in the coming week, we note the release on Monday of the manufacturing sales of June. On Tuesday, the release of the number of annualized house starts for July, and the crown of financial releases from Canada is expected on Wednesday, namely the headline and core CPI rates for the month of July, while on Friday we also highlight the release of the retail sales growth rate for June. That should sum it up for the day. However, before we leave you, as a general comment, as a closure, we would like to note that we expect the USD to maintain the initiative over the other currencies. Yet as the holiday period is on, we may see volatility remaining at rather low levels. Exactly for that reason, thin trading conditions may apply, so traders better be on the guard. And as closure, we would like to make a special reference to the interest rate decision of the Reserve Bank of New Zealand on Wednesday. Now, the bank is widely expected to hike rates by 25 basis points and raise the official cash rate to 0.50% from current 0.25%, given also the recent boom in New Zealand's housing market. Please note that NZD-OIS imply that the market has currently fully priced in such a scenario, and with everything else being equal, we may see the Kiwi getting some support from the improved interest rate differential outlook until the release. Now, at the release, should the bank actually hike rates as expected and at the same time show some confidence for the economic rebound of Fortress New Zealand, we may see the Kiwi getting additional support. That should sum it up. From all of us here at IronFX, best wishes for solid trading.